Hi, nowadays I spend a lot of times analyzing and Q&A session for myself. If you look at number, bid and offer, like 68 to 78, that's like 10 pips apart, meaning that you go in there, um, then you'll be minus 10 pips pretty much, and that's a whole lot. That's a real bad deal. So right now the time is at the time it's Friday, 12 noon. That is LA times. In New York, that will be 3:10 p.m. So it's kind of late. It's they're almost about the time to close the Wall Street in New York, and probably most people are out by now, headed to weekend. So you would ask yourself, is it a good time to trade? Probably not. 10 pips minus initially, that would be the worst thing for anybody's trade. So I asked that myself. So there it is. Another pair that I want to look at. British pound, Japanese yen. Looking at 1 hour chart. So I magnify this a little bit. Still too small. About here. Okay, this bar is hourly bar. And as you can see, when the oscillation curve, when it goes up, this goes up from here to there, and that's at okay, about right here. Last night I was looking at it. That's like 12 midnight last night. And you see, every time it goes up, look at this. It goes up from bottom to top, and it goes this much high. And when it almost got here, 1 a.m. in the morning, it's coming down slightly. Here it moves a lot, all the way to about here, nearly halfway down, and moved very little. Probably only 15% of the whole movement going upward. So it's as if it's like 85% buyer and 15% sellers. It's outnumbered the bulls market, definitely. So bears market, the seller just don't have enough strength. Seems all cooled up. And then I put a line there indicating it's a London open hour. So as you know, there's a AB equals CD pattern. That's A, B, C, D. I drew this line, and there was I waited waited almost 2 hours last night. This, as you know, this candlestick is an hour long, so almost 2 hours. About here, coming down, and I see the arrow that pointing upward is going up. So here I bought it for 50 pips. So from here to here and to here to another equal length here, 50 pips, right? So it's AB equals CD is, that's that doesn't happen all the time, but anyway, that's the patterns that I use, and then from here to here, I went to sleep. I don't know what happens afterward. Wakes up and finds 50 pips were already deposited into my balance. 50 pips movement. So the thing that I ask myself a question is, when it goes up from here to here this much, long range, that moving from here to here, and then from top to almost the halfway down, it only moved this much. That's the question that I have. Like, why did it move very little? I questioned that, and my conclusion was, it's a bullish market. It's not going down. It's gonna go upward, and I got in right here. So stop loss set to like 12 pips only, not a whole lot. But here it survived and went up and took 50 pips while I was sleeping. And if you look at the there's a purple line there, and all three lines is below the purple line. That's a maximum strength. Even the maximum strength going the negative trend, it only came down this much. If I had gone in, bought it here, you see the line that's coming all the way down here, they would have stopped me out. So I waited about a couple of hours after the London has opened, and then got in. So I would have probably got in about down here somewhere, and 12 pips, that was enough to handle that, and took 50 pips. Yeah, so what I think really is I do a lot of analysis in past week, previous day, and then every time the line crosses, what does it do? What does it mean? I ask myself then, all these arrows, what does it do? Crosses line here, crosses line there, and then arrow appears, and then more arrows here, and then goes up. I put a yellow ellipse there to indicate it's time to buy, to remind myself. And this is one of the examples. I look at the hourly chart, I look at weekly, and then the daily, and then 4 hours and 1 hour. Look at all of that. Yeah, so it's right now it's almost closing time. It's about very close to more or less an hour later they will close. So right now it's you see that it's settling down toward the end. Short consolidation, settling down somewhat. There's a lot more that I go through, asking myself. I look at this number, what, 38, 5, and here right now it's okay. Somehow the number doesn't show. It's all right, but the number is 41. It's higher than 38 here, and then the number here 40. somehow the video camera cannot see that number. So these are people that buyers and sellers. The volume 410,000 share, 310K share, the volume size of it. So this time I would think that I've been lucky to set this line ahead of time right here, and then just did exactly what I thought it would do, and even went further. So that was something I wanted to look back and be proud of myself looking at that. But once again, folks, that was simulation account that I was working on, not the real amount, not the real money. When I looked at the NADEX, the British pound, the Japanese yen, they all expired. There's nothing left for today. But I found one of them, like Euro USD, still has one of them yet to be expired. So this thing has 36 minutes, 49 seconds to go. And you see that it's will it be higher than 10:52 or less than 10:52 at 4 p.m. So we are 36 minutes away. I'm not going to do this. Okay, let's see the differential in prices. 97, 86, 87. 79, 87. So that's seven pips apart. I mean $7 apart, right? Since these are prices, $7 apart. That's no way, no way I would trade something like that. At this time, the volume of trading is very low, and trying to overcome $7 before you can even think of possibility of making the money is too low. Risk is tremendously high at this time. But then again, this is let's head over to Euro USD. So they were rising and rising all day today. So here, if you look at it, if you waited till what time is it? Yeah, it's 4 a.m. in the morning. I'd probably be sleeping by then. Look at here, 10. That's 2 a.m. in the morning when the euro opens. And it comes down halfway and comes up very little. Again, it's like about 50% of they're selling it, and 15% and 85% buyers, 15% sellers, 85% buyers, roughly. So definitely it's a bullish market. It's not gonna It's predictable. It's not going to come down. Here I could have done the same. AB equals CD here, and then goes up. Probably, yeah, somewhat equivalent. Probably done the same thing. Yeah. So this is main thing that I look at, analyze, and ask myself. Here the price doesn't show somehow. So instead of doing like 5 minutes expiration thing, those are too small, and if there's about 5 or 7 different unknowns, you screw up one of them, and by the time you know it, it's too late. So the risk is so high for 5 minutes. I don't mess around with those anymore. I just go for long term, like overnight or 2 hours or that sort of thing. You have all time in the world to analyze it. Try not to screw up, and that is better risk to reward ratio. And probably there is a whole lot that I look at, but this is what I have for now. I usually go to 4-hour chart. For 4-hour chart, I use that to look at just approximate overview, sort of. And I go to 1-hour chart to see what time of the day start going down, start going up, that sort of analysis. So each dotted line, vertical dotted line, these are day 1, day 2, day 3, goes like that. And you see the rectangular shaded boxes. These are the ones that started going down and stops here. Here going down, stops here. So I put the rectangular boxes there, and then analyzing what time did it start going down. What time? Usually about 3 a.m. in the morning to about maybe 5 a.m. in the morning. They are all different. So if I look at this, let's magnify it a little bit. Okay, this one's a better example. Instead of going down here, and that's 3 a.m. in the morning, right? Oh, not 3 in the morning. Where is that? Sunday. Okay, no, that's not a good example. Okay, let me see this one. That's 16. That's 4 p.m. That's when market close. (3 a.m. in the morning, right here. 3 a.m. in the morning. Started right here and started going down. And rock bottom, that's like 2 p.m. next day. So that's what I look at, kind of repeats over and over each day. Trending down, all of a sudden went up a little bit, and then trending down again. But what I realized was that each one of them that goes down the cycle, 1 hour cycle, so started going down. And then here it started going down again. So I can basically look at the cycle and predict the outcome. And also this Bollinger Band, when the lines are straightening upwards like this, it's going up. So when it goes up a lot. When it comes down, very little. And when it goes up in line with the Bollinger Band direction, it goes up a lot. So that has a lot to do with the characteristic, looking at the characteristic of it. And when the line crosses, you see the arrows. There's a lot of information that I'm not mentioning here because time is short. Yeah, but it's all this trading is 99.99% of the time it's all analysis and looking at the characteristic and see if they are in line with this curve direction. Here the dots that are in line, came down a little, and then also the cycle line here, oscillation, the line here, the price action comes down, goes up, comes down, goes up. See if all they are in line, and with all this detailed analysis, better, closer model projection can be made. At least keeps me out of trouble, and probably more than 50% of time to winning the probability. Yeah. For now, that's all I have. Thanks, folks.